Clear from CAG, sorry, that's great. This is first in a series that we've started for Beating the Virus webinar series. The coronavirus, of course, as you all know, has hit us in unprecedented ways. There is no single event like this, possibly in Australia's history and certainly in many of the nations of the world. I was hearing a statistic yesterday that the UK's lockdown of their country is the most severe, the most harsh since 1666. There really has been nothing like it. And of course, the effect on all of us individually, collectively, of our businesses, our organisations, the clubs, all kinds of things that we engage in, weddings even, are all impacted. And so it's a great time to actually take stock from experts in different specialist fields to see what you can actually do in order to improve your situation during this critical time, and to be able to manage it. Also, for people around you who have questions, and they have concerns of their own and they don't have access, for you to be able to point them to resources of people who can really help, and ideas that you hear around your network as well. So thank you very much for joining in this morning, and we look forward to a great session. Now we have with us today Michelle Maynard, who is a partner at Carbon Group based in Ellenbrook. And Michelle is a chartered accountant. She has quite extensive experience in all kinds of industries over an extended period of time. And Michelle is also a member of our Chamber of Commerce. Michelle is a Channel 9 finance expert, which means that she's used to getting on camera and shining and being all bouncy and happy when it's something not happy to talk about, but also about being able to explain in very clear ways financial principles and facts that you need to consider. So we're really pleased that Michelle is able to join us. She's a fantastic expert and will be able to help us a great deal. So Michelle, do you want to say hi to the folks?
Good morning. Thank you for everyone for coming along. Hopefully you'll get some great information out of today's session.
Yes, fantastic. Now, let me just start then by asking you, Michelle, some questions. So obviously, this is hitting businesses really, really hard. It's hitting people's employment really, really hard all around the area. What kinds of issues are you hearing coming up right now in amongst your client base and in your network?
Yeah, so the hardest part over the past few days has basically been around two things. It's the businesses that have had to have closed. So, obviously our gyms, our, restaurant, hospitality industry. So we have quite a lot of clients in that space. So it's them not knowing how they're going to survive. And it's also from other businesses that are seeing a real downturn in their trading. The uncertainty about, are we going to close, how long we're going to close for, and therefore what does that mean for my cash flow, for my staff, for my expenses, really has people worried. So I think it's about they don't know what the plan is and how long they have to plan for, because we don't have a defined period right now. Gyms are thinking they could possibly be closed for 6 months. And what does that look like for a business that literally has had their income turned off overnight? So there is a lot of uncertainty. I've had a lot of clients on the phone crying to me because, obviously it affects not just their business, but then their livelihood and not only their livelihood, but the livelihood of their staff. So there is a lot of worry out in the business community at the moment. And we're just doing the best that we can as an industry and as a collective of small business owners to try and step through that the best we can with all the unknown information that we don't have at the moment.
Yeah. Are there very specific kind of, income dropping overnight, but there are other kind of mid-range problems that you're seeing?
I think that the main thing people are grappling with is staff and what to do with staff, and also how can they service their clients in a way that adhering to the ever-changing things that are going on at the moment. So, for instance, one of my clients is a chain of Pilates studios. So they've been scrambling overnight, basically, to try and move their business and pivot it in a different way. So they're moving to an online space, offering an online membership. But while they do that, and they're still trying to service their clients, they can't charge the membership fees that they were charging. They can ask their client base to opt in to be a part of this new service, but the income that they had forecasted and they were relying on when they had expanded and taken on new premises was based on an ongoing membership. So it's about trying to still afford those things and have those discussions with landlords and key stakeholders about what they can do during this time when they don't have any income coming in the door and no income coming for the foreseeable future. So it's about trying to plan for that, but not having all the information to be able to do that, because we just don't know how long this is going to go for.
Yes, those periods of great uncertainty that are so hard to deal with, it's really difficult to grapple with, because then you say, well, there are a million different scenarios that could happen. How on earth do I cater to any or all of those?
And I think it's also hard when having those discussions with staff as well, because especially in the hospitality industry, there is a lot of casual staff client base. Not being able to provide them any income, so obviously letting them go and saying for the foreseeable future we don't have it, but also for those full-time and part-time stuff where you are meant to be able to guarantee them income. I think people as business owners, we care for our staff quite greatly, and it's about trying to balance helping and supporting them while trying to keep a business afloat. And people are having to make staff cuts, they're having to reduce numbers, reduce shifts, let staff go, and I think people are finding that quite difficult.
Yeah, absolutely. And what about personal finances? You've got people coming in to talk to you about that.
Yeah, well, obviously the flow-on effect from having a business that doesn't bring income is how are they going to afford their personal finances, and what are they going to do with their mortgages, and are their houses now at risk? And obviously, depending on what structure you trade through, a lot of people do have their personal assets on the line. So, people are quite concerned about that. We saw the banks come out and say that they are going to put a 6-month freeze on business finance, whether that's business loans for equipment, that sort of thing. They're also offering now, in times of hardship, putting a freeze on your mortgage repayments. But the uncertainty around that at the moment is what happens during that time. The banks have said that they were going to capitalise the interest, which is understandable. But is that just added to the rest of the lifeline of the loan? Some banks are saying you'll have to make a lump sum payment at the end of the 6 months. So I think people need to have those discussions with their finances to basically say, what is the option and what will be happening to me? Because everyone's making short-term decisions right now, but you need to understand the long-term implications of those, so you are set up for when the loan starts being due again, what's that going to look like? So there is a lot of uncertainty about how people are going to survive personally and what that means for their personal assets.
Yeah, because if they are capitalising the actual repayments onto the loan, then over the longer term, with a 6-month deferral of that, then over the longer term, that's actually going to cost you a little bit more, isn't it?
It is, and that's the calculation we people are needing to do. 6 months short-term gain, but what's the long-term pain of that? And while businesses and people are trying to keep their head above water, they may be willing to forego, to take that 6-month shortcut. If there's no income, then they don't really have much of a choice. But it's about what's that going to mean, and planning for that future, how you're either going to make that up, or what that long-term plan is for that loan.
Yeah, well, we'll talk in a bit more detail later about some of the bank packages that are available and what that means for everybody. So as we go along here, all of those who are attending, please add in your questions in the chat and we will address those as we go. We've got a structure throughout the course of the webinar, but we'll have a look at the questions that you have, and if they're germane to what we're discussing at the moment, then we'll address those. And then also we'll look at some of those key questions on the end. So just add those into the chat section and we'll keep an eye on those. So Michelle, what would be your top tips right now in terms of principles that people should be applying with their finances?
So I think it really depends on what situation you are in at the moment. But I think what we can all do within our businesses and our personal finances is take a time to analyze our income and expenditure and really look at what is necessary and what is not, especially when it comes to expenses. Now, while we all want to support business at the moment and not make too many drastic cuts, at the end of the day, we have to be able to, make some sacrifices to save ourselves and to save our own personal finances. So what we're asking our clients to do is, first of all, look from an income source. If you still have income at the moment, have a look at what that source is coming from. Have a look at what the plan would be if we were to go into a shutdown. Can you still provide a good or service from your home? If not, what backup plans do you have? Do you have savings? Do you have a contingency plan in terms of some overdrafts or capital? Are you going to take up the government offers about obtaining some unsecured credit just in case you need it? So I think the first point is looking at money coming in, where that comes from, what's the likelihood of that stopping in the medium or near future, and what you're going to do if that happens. We then go to our operating expenses and have a look. We need to go through all of them and start having discussions with our suppliers. A lot of people are approaching their landlords. The government has said that they will be making an announcement possibly today, but sometime this week, about what that looks like in terms of landlords and tenants. I do feel for landlords at the moment, because I know that that is an investment that you are trying to have income on, especially if there's loans there. I think a lot of businesses are presuming that landlords are going to go cap in hand to the bank and ask for a 6-month deferral on the loan, and therefore are asking for reduced rent. So I think you need to have those discussions, but also keep in mind that we are dealing with other businesses who are also in some financial distress at this time. Analyze all your operating expenses. Either have discussions with those suppliers about reducing the amount or cutting unnecessary services, really looking about what it is that is necessary to keep your business and your personal finances alive and what is not. Now is a really great time to do that analysis and just see. It's actually quite funny from a personal perspective. Every year at the end of the year, when I do our end of year taxes, I download our credit card statement and just sort it through, and sort it by name to see where the spending is coming from. It's a good idea to sort of go through those, because people have subscriptions that they don't know that they're paying for, or all these little things that if you add them up, it'll actually make a big difference over the end of the year. Do the online comparisons for things like insurances, personal insurances and also business insurances, or speak to your broker if you have one. But my key message there is, while cost is important, please do not jeopardize the cover that you have, because in this time we need to make sure that our businesses and our finances, our assets are adequately insured. So make decisions about where you're spending, but make sure that you're making smart decisions, so you're not making anything that's going to jeopardize your business or your personal finance in the future. When it comes to staff, you need to look at the makeup of your workforce. Do you have casuals or contractors? Because obviously they would be the first to go. Do you have staff that have leave entitlements, and what does that mean? There are different things that happen depending on the situation that you're in. So if your workforce is required to stand down under, say, a government directive such as the hospitality or the gym industry or the beauty industry from Wednesday night, those things that they've done, you are still required to accrue leave for staff, but you're not required to actually pay them. You can pay them their leave entitlements at their request, but it is a negotiation. But even when you're in a stand down period, you need to continue to accrue leave for your full-time and part-time workers. So I think that's something that businesses will need to make sure that they do. Still running those payrolls, even if you aren't paying them a physical amount, you still need to make sure that that leave entitlement is accruing over time. I think it's just a really good time for a period of analysis and a period of making sure that any dollar that we are spending now, both business-wise and personal-wise, is a necessity, because we just don't know how long we're going to have to stockpile and live off the savings that we currently have.
Yeah. So to reiterate those three things that you mentioned there. So first of all, looking at what money is coming in. And we can reliably expect to be bringing in over the next few weeks, especially, that your operating expenses, and you listed all of the different ones that you should have a look at, but the key principle there is not to assume that something is being given to you amongst those as well. Really analyse those and look at the priorities that you should manage for that, and of course check for any unforeseen kind of expenses that are coming out that you don't need, or you weren't really aware of. Sometimes that happens even with the best of a CFO in charge of even a smaller, mid or large size company. There are expenses that keep on happening and recurring, and you need to periodically be going through and auditing those. And your staff entitlements, making sure that you are really on top of your obligations during this period as well. So you don't just cut, but still make sure that you're on top of your obligations.
Yeah, I think so. And I think it's also about, making sure we're communicating with staff what the plan is. So there's a difference between obviously being shut down per the government orders and making staff cuts because of, trade has just dropped off. So really get some advice. The other key thing in that is in WA, there are 2 government bodies that you can fall under depending on your structure. So if you're a company, you would fall under federal, so Fair Work. If you're a sole trader and you employ people, there's a possibility that you fall under Wage Line, which is the state one. So WA is quite mixed in that respect. So I think people automatically just say, I'll go to Fair Work, and especially if they're getting advice from Facebook, whether in groups and things and it's national, most of the other states all go to Fair Work. In WA, there are two different bodies that you might fall under, and therefore the obligations are different. So make sure that you're aware of who you fall under, and make sure that you're following their directives and the correct awards, because that will impact on what you're able to do.
Yeah, absolutely. And getting and the thing is that a lot of those have very helpful kind of phone lines that you can phone and get advice. But at this time, I'm sure that a lot of those are also really, they're actually overwhelmed with the number of inquiries they have as well. So make sure that you do things in advance. Don't wait last minute.
Exactly, or speak to HR consultants or those contacts that you have, but definitely get some advice. They're really, really good fact sheets on their websites, and if you can get through on a phone line right now, definitely put your thing. A lot of them also allow you to email your questions in, which is not a bad thing to do, because then they will respond in writing, and then you have that in writing. So if you make a decision, you can at least have that to fall back on to say, look, I inquired, I was going off of this advice, and if someone challenges what you have done, at least you have some written advice there that you can fall back on.
Yeah, absolutely. And as I always say to people, ask. It doesn't
Yes.
do any harm to ask. So ask as much as possible, as many people as possible, and as many experts as possible, such as yourself, for what you need. So let's have a look now at, Michelle, at some of the details of the stimulus packages that are out there.
Sure, I'll just share my screen and hopefully this will work. And we'll step through, because there was, no, that's not going to come over. Sorry, give me 2 seconds.
So as Michelle just does that, and she's going to be sharing the package there, the information, and make sure that, of course, Michelle will go through all the details, but she'll also point you to the where you can find the specifics of those. Take note of make sure you are applying what's really relevant to you. Okay.
Can you see that, Pete?
Yes.
Perfect. Okay. So there were 2 stimulus packages that have been announced. The first was on the 12th of March. The second one was 2 days ago on Sunday, which was an extension of the first and also introduced some new things. So I'll go through both packages, because the second did change the first, and we'll go through all of that. So the Australian government has announced further measures, and we are expecting a third package to come out. They haven't ruled that out. They have put the provisions in place to be able to do that. But these are the 2 packages that we've seen so far. So basically, the first announcement, well, the announcement that came out on Sunday, which was an extension of the first, is businesses that are under $50 million in turnover and all not-for-profit charities are going to be eligible for a tax-free payment of up to $100,000. Now, the way that this is calculated is, and it's a bit complicated, so we'll step through it as easily as we can. It depends on whether you're on a monthly or a quarterly BAS statement for your pay-as-you-go withholding that you have for employees. Now, this is only for employers. What they will do is they will look at the pay-as-you-go withholding that you lodge between March and June 2020, and they will give you 100% of the pay-as-you-go withholding on those salaries back to you, a minimum of $10,000 payment, maximum of $50,000 payment in that period. Now, that credit is going to go to your BAS account with the ATO. It's called your Integrated Client Account. And if after you've lodged your March and your June BAS, there is a credit sitting on that account from this amount, that amount will be refunded to your bank account. So that is calculated on the pay-as-you-go withholding on your employees. Now, when they say a minimum $10,000 payment, so if you are a sole trader, well, if you are a business that employs 1 staff member and your withholding in that period is $500, the ATO will still credit your integrated client account $10,000. On the flip side of that, if you are a large business and your pay-as-you-go withholding is $150,000 in that time, it caps out at $50,000, so you'll only get that $50,000. The second part of this, though, is they will they will give a second payment between July and October that is equal to the first payment, as long as you remain what they say an active entity, so an entity that is still trading. The anomaly here, which seems to be quite poor planning in the legislation, is you actually don't need to continue to have staff to get that second payment. You just need to lodge your June and your September BASs. So the second payment is equal to the first payment. So again, a minimum $10,000 for those whose withholding is under $10,000, and then it'll match between $10,000 and $50,000, and then it's a max of a second $50,000. So again, this will be credited to the ATO's integrated client account, and then if that account is in a credit position, it will be refunded. So for our small businesses that have a couple of staff where the withholding is less than $10,000, they will get, over the period from April through to October, a $20,000 payment from the government, which is tax-free. So the max for those larger corporations is going to be a $100,000 tax-free payment into their integrated client account, which will eventually, if their account is in credit, flow through to their bank accounts that they can use for other things. So that is quite a great initiative, especially for those smaller entities. For those that have existing ATO debts, that money will be applied to those debts. So you don't get that into your bank account if you currently already have a debt with the ATO. The second latest announcement for businesses is the government will be providing a guarantee to half of a bank's loan to small to medium enterprises, which is now defined as up to 50 million turnover, for loans granted within 6 months from the 1st of April. These are going to be unsecured loans of up to $250,000, repayable over 3 years, but with no repayment due in the first 6 months. So what the government is trying to do there is trying to encourage businesses to take up credit. Now, this needs to be for working capital. So you can't use it to refinance existing loans. It needs to be credit for new purchases. And they're going to go half with the banks to guarantee that, basically. There's no asset that needs to be used to secure that loan. And they're really just trying to get businesses to apply. Now, the banks are scrambling at the moment to try and get together an approval process. Normal credit criteria definitely does apply to this. Like, they're just not going to be handing out money in line of the Royal Commission. They still have their responsible lending practices that they'll need to adhere to. But the government is going to guarantee half of that loan, up to $250,000 over 3 years, in the hope that it'll encourage businesses to borrow and then to spend and still expand during this time. Another initiative that was announced on Sunday in terms of individuals is access to their superannuation. So we know that it's normally quite hard for people to be able to access their superannuation, but the government has relaxed that to allow sole traders and casual workers, or those who are unemployed. If you have had a 20% drop in your income, you can apply to access up to $10,000 of your superannuation before 30 June, so in the 2020 financial year, and then a further $10,000 in the 2021 financial year. Now, that payment will be tax-free. It won't affect your ability to access any Centrelink payments if you're needing to apply down that route. And it will be an application process through the Australian Taxation Office through using your MyGov, not to your super fund directly. So what will happen, and again, the ATO is trying to get this all up and running. Most of these things come in effect from 1st of April. You will apply, you'll need to do some statutory declarations to prove, to show that you haven't had a drop in income and you're eligible. They will then give you a letter of authority that you take to your superannuation fund, and your super fund will release that money to you. When we are talking about pensions, the government has temporarily reduced superannuation minimum drawdowns for the 2020 and 2021 financial years. Now, what this is for those that draw a pension from their superannuation accounts, the minimum that you're normally meant to apply to draw down each year is 4% of the balance. The government has cut that by 50%, so you now only need to draw out 2%. And they've done this to basically try and preserve people's superannuation balances. If you don't need to take the money out of that, then they're trying to get you to leave it in, especially so super funds can recover during this time. So the other things that were outlined in the first stimulus was they've increased the instant asset write-off threshold from $30,000 to $150,000, and they've increased that for businesses with an annual turnover of less than 500 million. So what this is basically is if you buy an asset between now and 30 June 2020, and it is a single asset that's installed for use, it was cost less than 150,000, you're going to be able to write off the balance of that in this year's tax return. So again, it's a measure trying to get people to spend money to generate business within the economy. So they're hoping by having this, it'll get businesses out there. Again, it has to be the business use of the asset, so you can't buy a personal asset, or if an asset is part business, part private, you only get to claim the business portion of that in this year's tax return. Again, with businesses with an aggregate turnover of less than 500 million, they're able to deduct 50% of the cost of an eligible asset. For those that fall outside that first announcement, they're allowing you to claim 50% of any other asset. Another big one that was announced was the support of apprentices and trainees. So basically what was announced in the first stimulus package is they're going to pay businesses that have apprentices and trainees and keep them employed 50% of their wage, up to a maximum of $7,000 per quarter over 3 quarters. So that's going to be a $21,000 payment per eligible apprentice or trainee, because we're really trying to keep them employed right now, see their apprenticeship or traineeships through, because unfortunately they're normally one of the first to go. So there's an ability there to get $21,000 per apprentice or trainee. And as we said, loan repayments on qualifying business loans are going to be deferred. That was an announcement that wasn't made from the government, but from the Banking Association. And we're just trying to get some clarity around that, about what that's going to look for in terms, look for our businesses in terms of what's going to happen with that capitalised interest. WA, the McGowan government made some announcements. So basically, if you're an employer who has taxable wages which exceed $1 million but are less than $4 million, they're going to give you a one-off grant of $17,500. They didn't really have any other major measures. Other states have come out and given some quite generous incentives or refunds of payroll tax. The WA government is basically just deferring the tax for businesses that pay less than $7.5 million in wages, and they're also increasing the payroll tax threshold to $1 million. They're bringing that forward 6 months. It wasn't meant to start until later, so they are bringing that forward. So not a lot from the McGowan government at this point, but again, they have flagged that they will be possibly looking at different measures. Another announcement that was made on Sunday in regards to job seekers, sole traders that have had a reduction in their income, and those that are on income support payments, is the government is going to implement a new, what they're calling the coronavirus supplement, which is an additional $550 per fortnight on in addition to current payments that people are doing. So job seeker, youth allowance, parenting payments, and those that are listed there, new and existing applicants for that are going to get that $550 excess payment on top of their normal payment. And also sole traders who have had a reduction in income, if their income is below $1,086 a fortnight, I believe they're going to be eligible for this payment. They also have announced 2 $750 payments for those that are in receipt of government payments on the 12th of March. So they're going to be getting that payment put straight into their bank account, one around the 31st of March, so not too far away, and the other in mid-July. They're hoping that that payment will get spent, and then hopefully that will stimulate some economy activity for us. The ATO has also come out and said that they're going to offer assistance to businesses. Now, I've had to negotiate payment arrangements and had contact with the ATO a lot over the past couple of weeks, and I can hand on heart say that they have been fantastic in terms of supporting businesses. The minute that you advise that you have a business that has been impacted by coronavirus, they're pretty much doing whatever they can to assist. So they are deferring payments. At the moment, these things need to be applied for, but we're thinking that they might have some automatic things coming in place, announcements, because their phone lines are being swamped by people. Everyone's asking for assistance. So any business activity statement, so the February one is due soon. Anything that's lodged from an income tax perspective, fringe benefits, which will be due soon, they're going to allow deferring the payment of that by up to 4 months. They are still asking people to lodge, so don't hold off lodging if you don't think you can pay. So still lodge, but they're going to be granting 4-month payment deferrals and then allowing you to enter into payment arrangements. So normally the ATO rule is they like payment arrangements of no more than 2 years. I have had payment arrangements negotiated in the past week that the ATO is allowing 5 years. As long as you meet any obligations coming up, so you can't just keep incurring more debt. And that was renegotiating existing ATO debt. They're allowing that. Other things they've allowed me to do this week is negotiate a payment arrangement of $10 per month for 6 months, and then it's an agreement for a lump sum payment in the end. But they've just said, when just before that last payment is due, ring and we can renegotiate again. So they are being very supportive. The second thing
Michelle,
they're allowing...
if I can just stop you there for a
Sure.
second. So just Gail has asked the question there, and that's relevant to what you're talking about right now, is that in order to get the PAYG stimulus, do you have to submit those immediately on time?
Yeah, you do have to lodge them, and on time would be great. So yes, so that pay-as-you-go withholding is calculated solely off of the March and June quarterly BASs, or the March, April, May, June monthly IASs. So you do have to lodge those to be able to get that credit onto your account, definitely.
Yeah, and that automatically happens just by virtue of actually lodging the BAS. There's no other requirement for you?
No, it's not. It's all done automatically off that lodgement. Yes, that's correct.
Okay.
The second thing the ATO is allowing you to do is, if you're currently on a quarterly GST cycle, so you do quarterly BASs, but you think that by going to monthly BASs, you're going to be getting refunds quicker. So for instance, if you're a business whose income has dried up for the foreseeable future, but you still have expenses that you're paying, you can ask to go onto monthly GST. So you'll be getting those GST refunds for the next few months, rather than waiting to lodge your March BAS and then lodge your June one. So that's definitely an option for people.
And just a question for you there, Michelle.
Sure.
I've always found the BAS lodgements and the GST very, very painful to do. I hand it all off to my accountant, even though I can fill out the forms and so on. But going into the monthly cycle, where do you recommend that it's worth a particular kind of revenue bracket to do that, or for everybody?
I find monthly BASs better for businesses that aren't great at putting money away, because you then have to, it depends if you're in a refund position every month, then definitely I would highly recommend doing BASs monthly, because then you get a refund, you get cash flow back monthly. If you're a business that ends up with a payable each time you do your BAS, and you're not that great at putting the money away for it, then definitely I recommend, if you want to keep on top of that, then maybe moving it to monthly might help you stay on top of that, because you're only having to pay a smaller amount, a third of it monthly, rather than saving up for the end.
And for those,
a lot of people are unfortunately...
Sorry, go on.
No, I was just going to say, for those who are great at putting money aside, and maybe have that sitting in an offset account, which is great for their mortgage, then definitely stay quarterly if that's what works best for you.
Okay, and just in terms of relative effort, is it much more doing it monthly versus a quarterly?
No, it's pretty much the same. Well, it's the same process. It's just for less of a time. So
Yeah.
I always advise my business clients to do what works best for you. And if it's breaking it down into smaller chunks, make sure means you stay on top of it, then that might be something you want to consider.
Yeah, great.
The next thing that the ATO is allowing you to do, so a lot of people who are in businesses, depending on what structure they are in, if they get distributions from trusts, or if they're a sole trader, they're in the pay-as-you-go installment system, which is basically that you prepay your tax every 3 months if you're in the quarterly system. So we would have paid an amount in September, December, in March and June towards the 2020 financial year. What the ATO has said is you've always been able to vary those amounts if you think you're trading is going to be down, if you think your taxable income is going to be less this year than last year. But they've taken it one step further and said, you're able to vary your pay-as-you-go installment to in the March quarter and the June quarter to zero, even if you are sort of on track to make the same sort of profit, if it's going to help you with cash flow. They're also allowing you to claim a credit for whatever you've paid in September and December and get that refunded back to you. Now, under normal circumstances, if you vary your pay-as-you-go installment and you get it wrong, so it means you end up with a tax bill, the ATO has the option to penalise you, because basically you should have been prepaying that tax. They've come out and said under this measure, because they understand cash flow for business is important at the moment, they're basically going to not do that. They're going to allow you to vary to nil for March and June. And if you think you need the cash for September and December, they're going to allow you to claim that back and get that refund if that's going to help you at this time. The ATO has also been really good at remitting any interest and penalties incurred after the 23rd of January. Again, that has to be a manual request. So you can either apply on the portal, get your accountant to apply on the portal, or make a phone call. And they are, like I said before, offering long-term low-interest payment plans at the moment. One thing that is not negotiable is that employers still need to meet their super guarantee obligations. So there has been no advice to say that you cannot pay super for your employees. So please do stay on top of that if that is something that is required in your business, because we know that the ATO is focusing on superannuation and coming down quite heavily. So if you have any super obligations, please make sure that those are still paid. I'm basically just saying here that we're here to help if you need any help, if you need any explanation of any of the policies. We are still open for business. I know a lot of businesses are winding down. We have a great workforce here. Most of what we do is on the cloud, so our staff are sort of home. And if anybody needs any more information about me, that is where you are able to find me. More than happy to take calls or emails, or if you have any quick questions about what's going on or what stimulus packages are available, more than happy to help. I will jump out of sharing my screen now.
We can leave that up, actually. Fine.
Oh, can you? Oh,
yes,
thanks.
absolutely.
Okay, perfect.
No, so that if people need to get in touch with you, they've got it there. Thanks so much, Michelle. Now, if anybody has any further questions, please do submit those right now. Obviously, you have the chance for Michelle to answer them while we're here. One question I have while we wait for that, Michelle, any further questions, is obviously, if you've got massive disruption to your business, for example, I know we've got Gail in there, she's real estate. They're not allowed to do any home opens or auctions at the moment, which is really going to impact the way they do, and therefore, given the market in general, obviously going to have quite a reduced cash flow over the coming months. How many of these measures are ones where you would say, look, it's really going to improve your long-term position, and how many would you say, well, it's going to help you with a little bit of a fix for a couple of months, but you need to do something else for the next 4 to 6?
I think the ability for sole traders to claim the job seeker payment and still run their business is a fantastic measure. So normally under a job seeker payment, it has to be that you can't have any activity whatsoever, but they've actually relaxed those rules. The other thing that they've done too is they have relaxed, or basically said that they're not going to look at asset tests for those sole traders and those newly unemployed. So the ability to access government support, which I know a lot of people would it's not something we normally want to do. As business owners, we like to be self-sufficient and independent, but at the end of the day, we need to keep our business afloat, and we need to keep our personal finances afloat. So I think the ability to access the government job seeker payment and the corona virus supplement payment while still running a business is a fantastic measure, and one that we should be trying to obtain if we can, because that will enable us to stay afloat and not get to the point of crisis. The other thing the government has done right now is normally if you have money in the bank, you need to spend that money and run your savings dry before you're going to be able to access those payments. Again, they've relaxed that. So as a sole trader right now, you can don't walk into a Centrelink office. I've told you not to do that. Don't call them either, because you can't get through. You can apply online through MyGov to access the job seeker payment while still earning about $1,000 a fortnight from your business. It does take into account your partner's income as well, so that may be an issue for some people. So that's a good short-term and long-term measure, I think, because it's going to keep people with income in their pocket for the foreseeable future. And they've said that they're going to be doing that for 6 months at least. The pay-as-you-go withholding rebate is good in the respect that it gives business hopefully a cash flow injection now, and then they know that one is coming in July and October. So hopefully with some planning, if they know that they're going to get a refund of that, or they know that they're not going to have to find that money to pay the ATO, that should hopefully be able to help them make some decisions. And that's what I think it's about right now, is looking at all of these government measures, doing some cash flow forecasting and seeing how long your business is going to be viable. The accessing of the superannuation, while I understand it, it does cause me a little bit of concern, and this is by no means financial advice. But firstly, sole traders don't have a lot of superannuation normally. And also superannuation balances have taken an absolute battering with the share market, because that's what super funds are mostly invested in, with the share market taking a battering lately. So I'm concerned that people will go in and take large chunks of their superannuation at the moment without the ability of that to bounce back in value, because once you take it out, you've locked in those losses. So I think it is a good measure for those that want or need to have that cash flow, because at the end of the day, if your house is on the line, well, that's that's important, and we need to change that now. The government support of business lending, again, is a good measure to try and stimulate some activity. It's a good backup plan. What I am concerned about there is people will go and access the credit and then use the money and not have a plan to repay it. Because again, it's about getting access to credit and debt is fantastic, but if you don't have income coming in and we don't know when the income is going to come in, what does that look like? And the fact that it is an unsecured debt, I know people are a little less cautious, or a little, they don't. When assets aren't on the line, they may be more inclined to take that up. So again, if accessing the debt is something that you want to do, absolutely, but make an informed decision and have a plan about how you're going to pay that back, because at some time it is going to be there. So I think there is a good mix there of short-term and long-term measures. We know that the government will probably come back out with a third stimulus package, depending on how far-reaching the coronavirus is and how far it impacts on people and the businesses. They've already pledged 9.7% of the GDP, so that is a huge amount to try and keep the economy afloat. But in these times, we definitely have to. So it'll be interesting to see what part 3, if there is one, which there should be, will have for businesses and for workers.
Yeah, absolutely. So let's have a look at Robin's question. She asked, what period is the PAYG refund calculated from? I think you mentioned that earlier.
Yep, so it starts from March. So if you are a monthly lodger of income activity statements, it goes on your March, April, May and June IASs. If you are a quarterly lodger, it goes on your March quarter and your June quarter. So for those that are on monthly IASs, the calculation is done 3 times, so 3 times your March withholding. So because those that are on quarterly technically get the January, February, March. So for instance, if you're a monthly IAS lodger and your pay-as-you-go withholding in March is $10,000, they will give you $30,000. So 3 times what you withhold in the March month quarter in April. If you are a March quarterly lodger, they'll only give you 100% of what you withhold, but a minimum of $10,000.
Yeah. Okay. Yvonne says there, we're a swim school. Overnight we've gone to zero income, but we still have outgoings. Will the BAS payment apply to us?
If you had staff that you paid in your March BAS, then yes, you will still get that. It doesn't go on income. It just basically goes on whether you had staff. Now, even if you had staff and if they were all casual staff and you didn't have to withhold anything, as long as you are reporting salary and wages, so the item at W1 on your BAS, then yes, you are entitled to that payment.
I think that's probably an issue there for a lot of people, such as the swim school and higher education and other places where they employ people on a casual basis. And so Can you elaborate a little bit more on that?
Sure. So as long as they are employees, not contractors. So if they are, if they are an employee and you pay them a salary or a wage, even if you don't withhold. So what the rule says about the pay-as-you-go withholding measures, the credit, it says that you don't have to actually have withheld anything from that salary and wages. So say you had 5 staff members and they were all below the income tax threshold. So you might have paid $5,000 in wages but not had any pay-as-you-go withholding tax. You're still eligible for the minimum $10,000 payment because you've had employees, so you've paid salary or wages. If you have all contractors in your business, then unfortunately you fall outside these measures and you won't be covered. But as long as you had salary or wages for employees in the March quarter or month, if you're on monthlies, then you are eligible for this payment.
Okay. Now, Robin's just sent back another message. So if her March PAYG is 40,000, then it would be calculated to 120, and you'd get the maximum 100K in April.
No. So okay, so are you a monthly or a quarterly lodger, Robin? If you can just confirm that for me, I can tailor my advice.
Monthly.
Okay, cool. So if your pay-as-you-go withholding for March is 40,000, you will get the maximum first payment of 50,000 in April, because yes, it is 3 times the March, but it's capped at 50. So you'll get 50,000 in April, and then come July, August, September, October, you get 25%, so $12,500 each of those months when you lodge the July, August, September, and October IASs with the ATO. So you'll get another 50,000, but spread over those 4 months. 50,000 in April, and then 50,000 July, August, September, and October.
Okay. And we had a comment from Wiki's economic team at the City of Swan saying that thank you first of all for all of your information, but that also she was really pleased the ATO seems to be very supportive and flexible.
Yeah, well, thank you, and you're welcome. It's my pleasure. And yeah, I have actually been very surprised. At the end of the day, unfortunately, I think they, being anything else other than supportive and helping businesses through this is not going to be productive for anybody. I think the real key message from the ATO is keep lodging, and obviously these pay-as-you-go withholding measures that are linked to lodgement is going to help people do that. But keep lodging, keep in contact with them, and they are here to help. And they have been fantastic, to be honest. And so it has been really heartening. At the end of the day, they are getting swamped, and I think anybody in this circumstance, especially those dealing with the debt teams, I used to work at the debt team in the ATO many years ago. It's not a pleasant place to be, and it's not having people who want to do the right thing but just literally can't, because with the swim school, income has been turned off. They are being really, really great right now, and so it has been one less stress for people. So the key message is definitely still lodge, keep your lodgement obligations up to date, because there are lots of options available to you, with the ATO being really supportive at this time.
I think one of those lessons there is to ask early, ask frequently, and keep communicating with ATO and other banks and other debtors, landlords, and so on. Because if you do that, then you're more likely to get the positive response early on and take care of problems, rather than waiting and being silent and waiting till everything's come crashing down.
Correct.
Yeah.
One of the things too with this pay-as-you-go withholding payment is a key thing to be mindful of is a lot of accountants are seeing a tax planning opportunity, especially for, say, businesses that run through, like a mum and dad business that run through a trust or through a company that at the end of the year have just been taking distributions and dividends and don't actually have themselves on the payroll. There is some ambiguity about if you were to put yourself on the payroll now, before the March quarter ends, or before the June quarter, because it is calculated in March and June, would you be eligible for that payment? Now, technically, yes, you would be, because there is so you have an employee now, and there's pay-as-you-go withholding. However, the legislation actually states that if registering someone for pay-as-you-go withholding, so putting someone on as a salaried or wage employee, is done for the sole or dominant purpose of obtaining this cash flow boost, then it's actually a penalised offence, and the ATO will and can come after you. So I have seen a lot of people in a lot of the chat rooms that I'm in and Facebook groups going, my accountant has told me that they're going to register us for pay-as-you-go withholding. The ATO has actually taken the step of, we used to be able to register people for pay-as-you-go withholding on the portal. They've actually removed that option now, and you need to actually call the ATO and explain why you're putting somebody on salary and wages. Now, if you are employing a third party, you're taking on someone casually, and there is a real viable, legitimate business reason, then obviously that's completely okay. If you were a business that was active before the 12th of March and you do that, you should be able to get these payments. I think they are going to scrutinise it a lot closely if the people that you are putting on the payroll are the owners or associates of the business. So just be mindful if you are getting that advice. You need to have a legitimate reason. Now, there are legitimate reasons why you would do that. It could be something along the lines of, you want to go and obtain finance, and the bank has turned around and said it would be better if you were a salaried employee rather than a business. Completely understandable. You might put someone on casually to help you, while times are tough. If if you go and get a job elsewhere and you need someone to still work in the business, again, and that person could be someone related to you, but it just has to be a business reason. So I'm just really mindful when things like this happen and people are desperate, that people do take the opportunity to give advice, which may not always be sound or in the best interest. So definitely we are still trying, a lot of industry groups are trying very hard to get clarification about what does stand and what doesn't in that respect, because in this legislation, that is the big gaping hole that I see. So the minute I find anything more concrete on that, I will relay it to you, Peter, if you want to share it back out with the group.
Sure, absolutely. Thank you for that. And I think it's a good reminder that you should still be ethical within this period, because even just for the reason of doing the right thing, but also if you don't, it will come back to bite you later on. Because I know I've sat in with the accountants at firms where I've been working with whole firms, and they've sat down with their clients, one accountant and one client, facing a team of lawyers sent by the ATO with minute records of their phone calls, of their transactions and so on, inquiring about a discrete payment made 7 years ago at this particular time and what was that for. They have all the data they need about everything that goes on in your financials. You should be very careful to do the right thing at all times. Von did have a question there. If we don't have a PAYG ongoing, is that 10,000 still available? And I think that's because she's shut down with the swim school right away.
Yeah, and Von, that is a question, and again, that's another one of the anomalies in this legislation. So yes, so the minimum $10,000 is calculated on you having employees in the March quarter. So if you've had employees in January, February, March, if you're a March quarterly lodger, and you report any salary or wages, then yes, you're entitled to the minimum $10,000 paid in April, and then you will get $5,000 in July and $5,000 in October. So that's if you're a quarterly lodger. Now, that second payment is actually not contingent on anything other than you still being around as a business. So you don't still have to have employees. You don't have to report any pay as you go withholding in those periods, because we know you won't be employing staff at the moment because you don't have any income. So the first payment is linked to you having staff in the March quarter or March months. And then the second payment is not contingent on anything at all.
I have to unmute myself. Sorry, I had muted myself. I suggest that from there, that any other further questions ever relating to that's going to be quite detailed, and we would really need to be done in a professional setting where you've engaged Michelle or somebody like that, because otherwise it's bordering on giving advice without actually having the full details. So if there are any, just a last call for any further questions, we're going to wrap up at a couple of minutes. But just while you consider that, if you have any further questions, Michelle, thank you so much.
My pleasure.
It is a very difficult time, obviously, and be hard on you as well, receiving all those people coming in, as well as, of course, what it's actually doing to them when they're suffering stress. But again, I think all those principles that you've outlined there and the information you provided are really, really valuable. It's difficult even when you know, and I know we've got lawyers and others on in this webinar, even when you know a lot about the area, when you're not a specialist like yourself, it's very difficult to make heads or tails sometimes of all of the details and all the implications and the mechanisms by which you do things, that are everything is coming out from the government. And I know that that's actually clarified a number of things for me as well, even having read through those. So I really appreciate your time.
Thank you. No, my pleasure. And the Treasury website, treasury.gov.au/coronavirus, has fact sheets on each of the measures. And I think what I've seen to date, those are the best explanations. They do have some examples and things on there as well. Just be really mindful about where you're getting your advice from. So obviously go straight to the source of the government would be great. I've just seen in lots of chat groups and things, people giving their interpretation of what they've been told, and definitely always go to the source or go to your advisor to get the advice, because it is troubled times at the moment and people are really desperate to find out what they can do and what they can access. So always making sure you get sound advice, I think, is the best thing to do, so you're not making uninformed decisions.
We know not to trust Facebook. There's all kinds of crazy stuff on Facebook. Don't trust it.
Absolutely.
Yeah. For example, before I flew over a couple of weeks ago, before all this started to close down to Sydney, somebody related to me that the one they'd read on Facebook was that if you directed the airstream from the little nozzle up above you in the cabin over yourself, you could create a shield of air that would protect you from the coronavirus.
Oh my word.
Yeah, we joked about it. It's crazy, but people have said those kinds of things. Now, in terms of that information on your website, the Carbon website, do you have, for example, the links to those ATO information portals and so on?
If we don't, I can get them up there. If not, I will send them all through to you, Peter. I'll send through the fact sheets and also the links. And if you want to disseminate it amongst the group.
Oh, great, fantastic. We have a website, a web page on the Chamber website, the Chamber of Commerce and Community.com website. I have a dedicated coronavirus page there, so you can see it on the menu, or you can just do Chamber of Commerce and Community.com/coronavirus. And I have a number of factual links there that people can access. I have, for example, the current data sheet from Johns Hopkins University about the spread of the disease around the world, and that is the most accurate interactive database that's available anywhere. And then also other links to the Australian and West Australian government sites for coronavirus. So yeah, Michelle, if you include that and send that through to me, I'll pop that up there on the webpage as well. And
sure.
make sure that you're getting accurate information from wherever source you are, as Michelle said, from the people who actually know and who are the ones generating it and working with it. So, and of course, Michelle, if you want to get in touch with her there, you've got her details there on screen, and she's a fantastic resource, as well as the group in general. Thank you very much. If there are no further questions, thank you for your participation today, and thank you so much, Michelle. Appreciate it.
My pleasure.
And we know we've all got a busy day, and hope you have a wonderful day. This will be available, just for information, the recording of this I'll put back up on, make available to you as well, so you can review that at any time. Thanks a lot. Have a great day. Bye.